Prosecution witness and former 1MDB director Tan Sri Ismee Ismail told the court that 2.28 billion ringgit from 1MDB transactions had entered the personal accounts of former Prime Minister Datuk Seri Najib Razak. Prosecutor for the 1MDB Tanuri trial, Datuk Seri Gopal Sri Ram, walked Ismee through various 1MDB transactions in his re-examination of the witness, showing him that Najib on several occasions had money funneled out of the Sovereign Wealth Fund and into his personal accounts. Referring to a chart, Sri Ram showed the witness transactions of a joint venture between 1MDB and Petro-Saudi in 2009, in which 1MDB had agreed to inject $1 billion cash, while PSI was to inject $1.5 billion worth of oil field-related assets. Out of the $1 billion, $700 million was transferred to Goodstar, a company linked to fugitive Low-Tech Joe, instead of the joint venture company. Sri Ram showed Ismee that from the $700 million, Najib received $20 million via his personal account in two tranches of $10 million each, with one tranche going into his personal and bank account with number ending 694 on February 24, 2011, and the second tranche on June 14, 2011. Sri Ram also asked Ismee if Najib had also benefited from Phase 4 of the 1MDB Tanore case, which revolved around a 1MDB Deutsche Bank loan, 50 million ringgit of which ended up in a bank account with number ending 880 belonging to Najib. Ismee said that from the charts he could see that the funds went into the account of the former Prime Minister. During the start of Ismee's re-examination, Sri Ram queried him on Najib's and Low's relationship during his tenure as 1MDB director. Ismee said that he believed that it was a close relationship. Genting said on Thursday that the maximum amount of funds to be allocated for the group's proposed share buyback will be subject to its retained earnings of 10.37 billion ringgit as at December 31st, 2021. In a shareholder circular filed with Bourse Malaysia, Genting said that for illustrative purposes, based on its 3.88 billion issued shares and 26.32 million treasury shares as at the last practicable date of March 15, 2022, the maximum number of Genting shares that can be purchased pursuant to the group's proposed share buyback is 128.76 million shares. Genting is seeking shareholders' approval for this share buyback renewal to be tabled at its forthcoming AGM. The company's 54th AGM will be held on a virtual basis on June 3, 2022 at 10 a.m. According to Genting, the actual number of shares that may be purchased will depend on the availability of funds, relevant cost factors and market conditions and sentiments. The proposed share buyback renewal, if implemented, will provide the group with an additional option to utilize its financial resources more efficiently by purchasing Genting shares from the open market to help stabilize the supply and demand of shares traded on the main market and thereby support its fundamental value. Meanwhile, the proposed share buyback is not expected to have any material impact on Genting's ability to recommend future dividends, according to the group. However, the board will have the option of distributing treasury shares as share dividends to its shareholders. Malaysia Building Society rose as much as 4 sen or 6.25% to 68 sen on Thursday after Bank Negara granted approval for the company to commence negotiations to acquire Malaysian Industrial Development Finance from Pemodelan Nasional. The Kantar was the most actively traded stock of the day with 117.49 million shares transacted. At closing, the counter paired some gains to settle at 65.5 sen, still up 1.5 sen or 2.34%. Year to date, the stock has gained 21.3%. To recap, on Wednesday, MBSB said that BNM had no objection for it to enter into discussions with PNB to explore the possibility of acquiring the 100% shareholding in MIDF. The approval is valid for 6 months. MBSB, which is 65.39% owned by the Employees Provident Fund, has 47 branches nationwide as at end February. In November 2017, MBSB acquired Asian Finance Bank for 644.95 million and renamed it MBSB Bank via a rebranding exercise. Transocean Holdings, which received an unusual market activity query from Bursa Malaysia on April 6, clarified that a major shareholder had explored proposals that could facilitate the drive of its business segments. However, according to the filing, the group says that discussions were still preliminary and the said major shareholder had decided not to proceed with any of the proposals for the time being. Transocean says that aside from that development, the board is not aware of any rumours or reports concerning the business and affairs of the group that may account for for the sudden spike in trading activity. The Umma query came when its shares rose from 2 ringgit 12 on April 4th to 3 ringgit 28 on April 6th, a gain of 54% in 2 trading days. Trading volume surged to 1.39 million shares on April 6, or 8 times its 200-day average volume of 159,641 shares. Transocean is an integrated logistics services provider with operations in Malaysia and Singapore and is also involved in the manufacturing of tyres. Tan Sri Dr. Muhammad Nazmi Muhammad Saleh is the largest shareholder of Transocean with a 32.62% effective interest. Last year, Datuk Syed Budris Putra Jamalulail, a member of both the Selangor and Perlis royal households, emerged as a 30.72% shareholder of Transocean via Enfrasis Consulting. Meanwhile, Thai billionaire Tan Sri Surin Upakkun emerged as a new shareholder of the company in November 2021. Transocean's share price closed 1.52% lower today to end the day at 3 ringgit 23. Despite the outlook on retail sales improving, AM Investment Bank expects rental reversions for malls in prime locations to remain muted in the near term, as tenants will still require some time to recover to their pre-pandemic sales level. In a note, the research house said that although retail sales and footfall have recovered since the relaxation of movement restrictions, it does not expect it to translate into a significant improvement in rental reversion rates for malls in the near term. Citing the National Property Information Centre, it said the performance of shopping malls in Kuala Lumpur remained in a downtrend on the back of rising total retail spaces. Aminvest said that while there will be more stable rental renewal rates for popular malls located in key areas, rental reversions for less established malls are likely to turn negative. It adds that for these smaller malls, increasing occupancy rates through attractive rents will be imperative. Meanwhile, Aminvest says that the pressure on rental reversions for old office buildings in Kuala Lumpur city centre will persist given the growing oversupply of office space on the back of office decentralisation and flexible working arrangement trends. According to the research house, the performance of offices in Kuala Lumpur continued to soften as overall occupancy rate fell further to 73.3% in 2021. However, it foresees gradual recovery in the hospitality segment from the reopening of international borders on April 1st.